What's up, everybody? It's Jimmy with Trading Decoded. It is May 30th, 2024. And like, share, and subscribe to my channel, videos, and all that fun stuff. With that out of the way, I'm sure some of you out there were saying, that Trading Decoded guy, that bald-headed guy, that Jimmy guy, that grifter, that scammer, that all those things, he must have lost his ass, and that's why he's not making videos. Unfortunately, that is not the case. I have not lost my ass. I lost it because I lost weight, but I've been sick as a dog for these last few days. So thank you for your concern, and I'm sorry to disappoint for those of you out there. For the rest of you, I apologize for being not posty. I've been on the mic every morning, but for partial amounts of time with our community, as you guys know, because well, I felt and sounded like complete dog crap. So thank you for enduring that. And hopefully during those few days, even though I was only on for about an hour per day, we were able to find some very nice trades, very, very good trades that paid very well. Yesterday's 29.2% on the one trade I took. The day before was 65.2%. And then today's, I got a 72% winner. Personally, but in that same trade, which we'll go over here in just a minute, the majority, when I say the majority, everybody who took the trade with me, a good portion of them had a one and done day. Minimum of 15% return for most of our people, and as high as a 75% return for some of our other people, and everything in between. It was a beautiful thing. It was a nice, clean move. Trade lasted a total of 3 minutes or so. Then we found another one worthy of taking to the downside. That was also a 3-minute trade. Actually, we found two of them. One 3-minute, one 2-minute, one 3-minute, all of which returned at least 20% if you got in and out at the minimum levels, and more if you hung on to some of them. But let's go ahead and talk about what we saw, what we did, why we did what we did, and what happened later in the day after we were already gone. So in the morning, we had a pretty tight pre-market range, and then our 8:30 reports came out, which weren't really good, but they weren't bad either. Popped us out of our pre-market range and got right to this brick wall of a futures line here. Now, call put scenario. Everybody wants to know, hey, where's the calls? Where's the puts? All the things. The majority of the pre-market, the market was red. We had gapped down between yesterday's close and right here and this morning's open, and we were below yesterday's low of day as well. So we had a gap above us at 525.37, which never got filled today. It came close but never got filled, and therefore call put scenario. Where would I buy calls? Well, near the open we were pushing right up against this yellow line, and I told everybody, I don't think I want to jump into calls knowing that the brick wall of that futures line would probably stop it. Now, with that said, we got above it and went line to line and slightly above it. I did put my call line with a candle close above 524.89. Why a candle close? Well, because we haven't had any price action above that line in pre-market that leads me to believe it's likely to continue up. So, while we were looking at this, knowing I wasn't going to play calls, and if I was going to have time to do it, I was queued up, as were many of our other members, for puts. Now, our put line scenario was all the way down here at 523.82. Why? Because I didn't want to jump into puts from this yellow line, assuming that this rock solid pre-market high line would stop us from continuing down. Okay, so what do we have to do? If we're going to play puts up here at resistance, and by the way, we got into these puts for specific reasons. Okay, number one, ADD at the open, rocket shipped up and was on a tear. So it was a little nerve-wracking to buy calls, or puts rather, there. But at the same time, Q's, big red candle at open, got back to their pink line, and we know that the Qs have resistance here, not only because of previous day, old support turned resistance, acted as resistance in pre-market. And I said to people, guys, we're going to get in. At least I'm interested in getting here because of the pink line. We closed below it. I'd like to see Qs come down to 454.10, or at least their pre-market low line. Okay, now right up here we have the SPY chart. Right here we have a Qs chart. Okay, I'm just trying to show you so that the times line up so you guys could see what we were seeing. Wasn't excited to the upside, because the Qs were below and already filled their gap, but were below their yesterday's low of day. Okay, that tends to act as a good support and or a good resistance line. Well, once we got below it, I had to believe it was going to be resistance, but I also had the benefit of saying, if we get above 455.59 with the candle close, I expect it to run up, and that's where our stop is going to have to be. Okay, so while we are rejecting this line up here, I'm telling everybody, I think I'm going to jump into puts here. Okay, we were up against resistance on SPY. We were very close to that resistance from the futures line. The stop loss was a candle close above the orange line on SPY or above the orange line on Qs. And we were looking for Qs to continue down. That's all. So we got in and we got out. Some people got out at the blue line. Some people got out at the bottom here because we were getting closer to the next line of support. Some people got out somewhere in between. Wherever you got out with money in your pocket. Okay, that was a banger of a trade. I don't know if anybody else noticed, but it seemed like volatility spiked pretty aggressively because these contracts gained a whole lot of value really quick. It was a beautiful thing. That was a one and done trade. We had 337 people in our room at the time of this trade. Couple minutes after that trade, we had dropped down to about 250 people left because they had made money and they said, hey, thank you, chart, for your gracious move to the downside. I'll take this money and I'll call it a day. One and done, guys. You stay 100% win rate if you let that kind of thing happen. But knowing that that's not reality for most people, we ended up not getting to our put line this time, pulled back to resistance. Awesome. Back to support, back to resistance, back to support, back to resistance. I'm sure you could see the pattern now. As long as Qs are putting in lower highs or struggling to move higher, play it in your favor. Okay. What is ADD doing at this time? Well, ADD was done wrecking the move to the upside and started to pull back at that time. So I was asked by one of our members, Jimmy, what do you think about buying puts here? I said, I think buying puts here is a great idea. Just know that if we close above this double top here, you're probably going to want to get out. And we'd be aiming for our pre-market high line. Why? Because that's where we're struggling to get lower than. Okay. If you're going to take it, make it what it is. Buy puts at resistance, sell them at support. Simple. Okay. Play the channel. Don't hope for more. Ultimately, you may get more. You might hold through a stop loss to get a lot more. Who knows? But if you're going to play this for what it is, get in at resistance, stop losses here, out at support, because it's proven to be a good support. That right there, several people took, made some quick money. Okay. Now, again, that's only a 30-cent move, but a 30-cent move returns 15, 18, 20, 22% on your money. That's not bad money. And you were in the market for a total of 2.5 minutes if you played that. Okay. We move back up to that line of stonewalling resistance. And again, I'm not playing calls unless we can get above 524.89. Or Qs could start breaking resistances to the upside, which we do find a call to take a little bit later. And I'll show you that in just a minute. But in this particular move, wasn't going to get in just because we had to move down because of this support. We closed below that support and it breached our put line. That's your entry. We were looking for a breach of that line. You get in, it turned its support into resistance and right down to the next support we went. Once again, that was about a 35-cent move. And depending on when you got in, some people got in aggressively because we broke the support of day. Whatever the case is, once again, beautiful, beautiful trade to the downside. Then we moved up, and at this point, we weren't looking for much because most people that were in my room were done for the day. And then we start talking about what would I need to see to buy calls? Okay, well, we can't forget our Qs. Okay, our Qs are pretty important. So where we took these calls? We took these calls at 11:29, and that was because at 11:29, Qs, right here. It's right here. I said, I mean, this is while we're trending down. So it's counter trend trade. We had started putting in higher lows. I wanted to make sure we were clear of this resistance right here at 1047, 1048, because that's really the only spot on the Qs, the earliest spot that was going to give us room to continue up to the next resistance. So when you look left, the next resistance we have on this chart is likely to be right here at the top of this candle. Not only do we have a line of support turned resistance, but that's the last time we tried to move up and got batted back down. So I said, just wait for a candle close above 523.26 and we'd look for the move to continue up on the Qs to 550 or 453.65. Okay, well, that close above that resistance happened at 1129. Well, here's our 1129 candle. And the Qs made it up to that point that we were aiming for pretty cleanly at 1134. Well, that is the exit for this trade. In because we broke, out because we reached where we were going on the Qs. Counter trend trade, we had started putting in higher lows, higher highs, so we had reversed the trend of the day at the time. Okay, and that was that. So for my counter trend traders out there, or people that were, missed some of these moves here. Now, anybody who was in calls today, my recommendation was considering taking profits if we get to this teal line. Why? Because, well, we have a 0% success rate of managing to stay above that line, even if we do close above it. It has not been able to do it all day. Can that change eventually? Yeah. Then we got into a very, very, very slow period of time where, yes, we were trending up, but theta is also ramping up. And you got to wonder, is my account or my value of contracts going to outpace theta? I don't know, because I was long done with trading by this time. I was at lunch, came back from lunch somewhere around 120, 130, somewhere over here. Okay. And then we started to topsy on to the downside. At this point, there's not much to do. Most of the people that listen to me are already done for the day. I am certainly done trading no more than 12 o'clock in the afternoon, 99% of the time. So just like I say to the rest of the people in our community who are in my room, guys, I'm useless to you after 12 o'clock. I know that my win rate drops significantly after 12 o'clock. I know that theta changes the dynamics of the way I trade. I know lower volume changes the way that my moves move. And so I don't trade against those things, okay? I make most of my money in the first 30 minutes of every day, and that's all I need, okay? I don't risk. We had a long conversation today about why I don't continue to trade with the win rate that I have. The fact of the matter is, the only thing that suffers the more you trade is your win rate, your confidence, and your buying power. Usually, nobody is going to trade more often and then have a higher win rate. Now, the argument could be had, and we did discuss this today, is that you can take more trades, have a lower win rate, but still make more money. And this is true. But what you're not remembering in that scenario is the days that you go from green to red and what happens to you emotionally and the things that we do based on that emotion, which is revenge trading. So yes, you may, on some days, take more trades, have more losers than winners, yet still end up positive on the day. But what you don't take into account, and most people don't because they don't want to believe that they have this weakness, well, I'm here to tell you, almost every trader has this weakness, and it's called emotions. And when emotions get involved, which they will, every single trade you take, you open yourself up to a larger risk than what you're taking into account. Okay? Why do you think they tell you don't trade more than 1% of your account on a given trade? Why do you think that that's a rule for most people? It's a rule because they know that there is that off chance, no matter how long you've been doing this or how good you are or how much money you got, that you're going to have that fuck it moment that you are willing to let a trade go to zero. And if you let a trade go to zero playing 1% of your account, it's not the end of the world. But if you let a trade go to zero that's 70% of your account, that's a big problem. And what do you think is going to happen to you emotionally if you take that kind of a loss? You think you're just going to walk away? Nope. You're going to use the 30% of your account that's left to try and make up for the 70 you just threw in the trash. You can hate on me all you want. You can tell me I'm full of shit. But if you're real with yourself, you've done it. And I know that because I've done it. Okay? I'm not afraid to share with you guys the weaknesses that I have as a trader and as a human being, because that is what causes this to be so difficult. So instead of me trying to figure out how to work around those weaknesses, I play to my strengths. I get in with a position size I can comfortably afford. I get the move that I'm looking to get. I take my money from the market, and then I go on about my merry way, hoping to do the same thing tomorrow. I'm not interested in going back in, putting what I have just done to make that good money at risk to make more money that is not going to benefit my life at all. It's not going to make my life better. The trades that I'm taking are paying me enough to be happy to pay my bills. I don't need a mega yacht. I don't need a mansion. I don't need a house on the beach or a vacation home in the Hamptons. Okay? I want to keep my truck, my wife's car, make sure my kids can get into college, take care of their retirement accounts, and live happily ever after. That's my life of comfort. My bills are set to auto pay. I don't have to check my bank account to make sure I can afford it. I pay the tax man, and I take my money out of the market in and out. Very precise, very quickly, as few times putting my money at risk as I could possibly have it. And the argument is, well, Jimmy, you're playing a larger position size. You can walk away more comfortably because you made good money for today. That's right. But don't forget that I started trading one SPY contract. I didn't start off with SPX. I didn't start off trading 5 contracts at a time. One way out of the money contract on SPY. That's how it started. Go back and watch the baby account challenge. That is still the account that I trade to this day with our community. Started it with 35 bucks. Documented the entire thing for 2 months. Grew that account over 10,000% in those 2 months. And then I started to scale responsibly, learning things along the way, became a more mature trader, became a better trader. And there's a lot of things in that baby account challenge video series that I used to do that I no longer do. Because I realized back then a lot of it was the odds weren't that great of me working out. Averaging down was one of the things. Not a smart thing to do. I don't do it anymore. Haven't done it in a long time. Because it usually means you're throwing very good money at a bad decision that you made. And you allowed that decision to get so bad that you can no longer accept that kind of loss. So instead, you're desperately throwing good money at it, hoping that it gets better sooner. Yes, averaging down sometimes will get you out of a bind. But more often than not, I don't want you to try it. Believe me, it ends up making a bad decision worse. Because you will literally keep averaging down, watching your money just go down the toilet. All right. So today we got nice, quick moves, calculated, precise entries, precise exits based on levels, based on cues, based on all the things, right? And then later in the day, long after we're done, there's a move. Down and up. Take a look at where we got to. We didn't quite touch the line here. Cues, right down to same line. Okay, if you're trending down and we're breaking supports, expect it to go down to the next support. Buy your moves at pullbacks. Okay, I don't trade this late in the day, so for me, you won't ever see arrows this late in the day. I don't recommend trades I wouldn't take myself. We're talking about trades I wouldn't take myself, so you never see arrows or rarely see arrows on my charts after 12 o'clock. That's a question I get often. Jimmy, how come you stop charting after 12? I don't stop charting. I stop willing to take trades because my win rate goes down quickly after 12 o'clock. Chalk it up to theta, chalk it up to levels of support and resistance that didn't exist earlier in the morning that do now. Chalk it up to less volume, chalk it up to whatever you want. It just doesn't work for me. So I don't try and make it work for other people. That's stupid. Now, if your strategy has you trade all day, take your trades. Just make sure you're following your strategy. Follow your rules. Just don't forget that thing called theta. Okay? Theta changes throughout the day. It's the dynamic in the market in options that is not the same throughout the entire day. Theta is way more forgiving in the first half of the day than it is in the second half of the day. Oh, but Jimmy, the contracts are a lot cheaper later in the day. You're absolutely right. You could have bought puts right here. And if you held on to them all the way to here, you were already red on this trade. And maybe if you held long enough, you would have got out of that green by the time you got all the way down here. Big green. When you get moves late in the day this aggressive, you can make a lot of money with cheap contracts. I'm not arguing that. But trying to guess which way that move is going to happen, good luck with that. How many of you would have looked at this chart right here and would have been comfortably buying puts at this moment and holding on to them, knowing how strong? Look how strong this level of support became throughout the day. Yeah, but Jimmy, you're putting in lower highs. You're right. And my argument is, I say it all the time, lower highs, I wouldn't buy calls on support because I expect it to break. It's just this late in the day, you're running out of time quick. When's the break going to happen? Are you going to stomach these pullbacks? Because these pullbacks take away about 40%, 50, 60% of your contract value. And by the time you come back down here, you're not even again. If you bought calls or puts here, okay? If you bought puts here, you get this pullback and even come back down here 7 minutes later, 8 minutes later, you're not whole again yet. You're not. And then you get this pullback here and then back down here. You're even more red now than you were at the last pullback. This shit hurts. You need a move like this to get out of that trade on the positive side. It's dangerous. It's risky. It's fun. It's fun to gamble at the end of the day because contracts are really cheap and they can move very fast. And if you go into those trades expecting that to be the case, if you go into these trades expecting it to go to zero, you can have a good time with it. And yes, there will be times you hit home runs with those trades. But I'm not trying to teach you how to hit home runs. I don't know how to play this stuff well enough or accurately enough to even justify the trade. I like higher probability chances of winning, not gambling. Okay, and if I'm going to gamble, I make it very aware that this is a gamble. It's a fuck it trade. I'm using a small position size or it's cheap or whatever. Don't do what I do is usually what I follow that up with. Okay, so I was done. We decided to break after 2:30 when I went and picked up my kid from school. And that was that. And yes, the move happened while we were gone. Some of you caught it. Some of you lost money on it because you probably tried to buy calls or something at the end of the day. I don't know. We look at this and we say, oh man, I'd have made so much money. Would you have? Would you not have chewed through all your buying power trading this slow, grindy crap leading up to that point? I see that happen all the time. Man, if I would have just stayed here all day, I would have caught that move and killed it. Okay. You're assuming you did nothing to destroy your confidence or buying power or anything else, or developed a bias throughout this entire day. Okay? That's your assumption. Some of you, yes. Many of you, no. Some of you were gone. Some of you waited, saw it, didn't play it at all. Some of you got lucky. Some of you traded it with skill. Some of you lost money. And everybody's out there, right? I just know where my issues lie as a trader. I know when I typically lose. So instead of trying to figure out how to make those losses less or trade more, no, more is not better for me. I want to be in, I want to be out, I want to make my money, I want to move on with my life. Because that's what my retirement plan looks like in 6 years. I'll get in, I'll get on the mic with our community, I'll take the trades that I'm going to take for the day, and then I'm out for the day. That's my 6-year plan. All while I'm making more money than I need to pay my bills, I'm loading up on my dividend portfolio, which I'm going to start making videos on here pretty soon because I'm starting to gain position sizes. Almost got 2,000 shares of Tesla. I started building out a Coinbase high yield dividend position and NVIDIA. I'm going to add to it Amazon and AMD as well. I know everybody's going to say, oh, Jimmy, that's the stupidest thing ever. I'll explain in that video how I'm using these tools, what I expect them to do, and I'll show you what it looks like. But until then, I appreciate you guys watching these videos. If you got any useful information in this video, please like, share, and subscribe. Appreciate it. If you'd like to join our Discord community, well, there's a link down below. We'd love to have you. First week is completely free. You get to hang out with me, Paul, and the rest of the guys in live rooms where we teach through the charts all day long. Okay. And if you like what you get for that free week, well, then consider becoming a paying member. We'd love to have you. One of our quarterly annual discounts is going to be coming up at the end of June. So if you're interested in that, heads up. And that's pretty much it. So until tomorrow, thank you guys for watching. I hope you did well today. I love you.